how to turn your blue chip assets into cash flow. And I want to be really clear why I say blue chip is we really don't deviate far from BTC and ETH. Now, of course, you can turn a meme coin into cash flow, but that volatility, it becomes very difficult to be a liquidity provider with extremely volatile assets. So we typically stick with BTC and ETH, and even most of my crypto portfolio is BTC and ETH, and there's a win-win there. So I'm going to walk you through how to use DeFiBuddy to do that. So I'm actually in this pool over on Uniswap. My returns are a little bit more like 80%, but there's a lot of volume right now, like as of this moment in the market. So this is probably a little bit inflated. True returns are closer to 80%. You're going to see that, right? Because your returns are based on the volume, and a lot of calculations will happen based on, you know, the last day or the last 7 days of volume. And so if there's a big spike in volume, sometimes the returns will be a little bit higher or a little bit lower. My recommendation is always start with a fraction of what you want to invest. So if you're going to be opening a $10,000 position, I would typically take $100, enter that position and watch it for a day and get like a better idea of the true returns. So here we are, we're on the Uniswap, we're on wrapped ETH USDC at the 0.3% fee tier. And as a liquidity provider, we're going to want to analyze the markets. Now you can do that either from the Crypto Market Explorer page, where you can actually go into the charts. We put this here on DeFiBuddy because it does give you a really quick visual of past performance for said pair, for said assets. So in this instance, we're looking at ultimately the price of ETH. And what's awesome as a liquidity provider, or if we zoom out as a DeFi investor, is I want to be careful how I say this. It's a little bit untrue to just say you don't care what the market does, because there is some strategy behind that. But we really like sideways markets. We like it when markets and the participant in the markets are, should we say, uncertain. They're not too sure if they should buy. They're not too sure if they can sell. There's a bit of action going on, but there's no like really clear bull market or really clear bear market. It's kind of like the markets are giving us a bunch of different signals. No one really knows what to do, and the markets are fairly sideways. There's still volatility, but overall the markets are fairly sideways. That's what we've been seeing at the end of last year and into this year. So as a liquidity provider, it's been our choice of investment styles, so to speak, to create cash flow. So if you're in a range of around 2,600 to 3,200, you would have been in range since really mid-November all the way to February 1st. So just call it 2.5 months, and the returns have been ridiculous. We're talking for myself 80% return. And my range looks a little bit different, but I have been out of range a few times. My range looks more like pretty much this. So again, I've been in range most of the time. I've dipped out of range a few times, and it doesn't bother me to be out of range for short periods of time. Now, I haven't had to do a massive rebalance yet, but if the price kept falling and I wanted to rebalance, then I can just lock in the profit on my short, rebalance my portfolio, all good, still making cash flow. Again, we treat our DeFi portfolios very different than we do our crypto holding portfolio. But my point, if I was entering a position right now, my range would probably look something very similar to this actually. And I'd be heading over to the tools section of DeFiBuddy, using my hedging calculator and making sure that I have at least an insurance policy set up. If you do want to see a video specific to that, do let me know. I'm happy to work you through the DeFiBuddy hedging tool. Now you're going to see these estimated APRs, and you're going to see, if I kind of like zoom in a little bit, you're probably going to see a very high estimated APR. Now why that is, if I go over the last, 14 days or even 30 days, we'll go 7 days here, you're going to see I would have been in range the whole time, and the liquidity that I would have provided would be being used very efficiently. And so again, and we're just back testing, we're looking at history, but to get a better accurate look at my actual returns, I'd go back around 90 days, and this is actually extremely accurate because that's what I have been averaging in my ETH positions. And so you can tweak these numbers, play with these numbers, look at actual data, and use that data to make decisions for the future. But in my mind, set a wide range, stick to blue chip assets, and then just make sure you set an insurance policy. So in case you see this to this, and we had some videos on our main channel, one of my LPs lost around $8,000 during this right here, but my short made me $8,000. I locked in the profits on my short, reopened my position. That was about mid-November, and then that position has been in range since mid-November up until today. Really hope this helps, and learning about it from a YouTube video versus just doing it, there's a massive difference. My recommendation would be go on DefiBuddy.io, head into the liquidity pools section, find a pair like a ETH USDC, ETH USDT, BTC USDT, and then head on over to the simulator and just play with these features. Go back test it for 90 days, and you can see, okay, if I would have been in this position here, let me invert that to make it a little easier to read. If I would have been in this position for the last 90 days or 60 days or 30 days, what would I have made? Just start Start playing with the numbers, and I think you'll come to the conclusion very quickly that this can be extremely profitable, especially if you're hedged and you're also building a bull run bag. Or we could call it just your treasury. I don't really like calling it a bull run bag anymore, but you're building your treasury, you're accumulating assets that have long-term potential, and you're stacking those assets. That's the name of the game that we're playing here. Head on over to DefiBuddy.io, bookmark the page, and play with it. It's free. It's our contribution and our gift back to the DeFi space. The crypto DeFi space has literally changed my life, and this was a tool we built to help you navigate the space. And we just want investors to be profitable, regardless of whether they're consuming a free YouTube content or using a free tool or they're in the UIG. This is funded by the UIG, so if you are a UIG member, thank you. You have helped fund DefiBuddy.io. And if you're thinking about joining our community, then there is no better place. If you're looking for non-hype investing, long-term investing, you're kind of not interested in trading and reading a ton of reports and knowing exactly what is happening in the market every single day. We're investors, we're not traders. All that to say, thank you for your support. With that said, I'm going to go let you play with DefiBuddy.io. If you like this video, like it, subscribe to this channel, and I'll see you soon. Peace.